Alright everyone, welcome back to the channel for another Bitcoin update. So this episode is a huge warning to anyone trading Bitcoin right now. I'm going to go through a bunch of different charts and talk about all of the red flags that I'm witnessing right now. In my opinion, in the immediate short term, it looks like we're going to be witnessing another brutal capitulation to the downside. So I'm going to give you my prediction for what's going to happen in the short term. I'm also going to give you my price targets for the immediate short term. If you're looking for my bear market low price targets, we talked about this yesterday for Bitcoin and Ethereum in the Bitcoin exact bottom video. So if you want to know what I think is going to be playing out in the higher time frames, be sure to check that out. But yeah, just a quick short-term update. So let's jump right into our first charts. Now, for these first two segments, we're going to be looking at the 4-hourly time frame. I've seen this kind of play out as both a rising wedge and a bear flag, so we'll talk about both of these. Now, starting off with the 4-hourly time frame on the rising wedge, this looks very similar to a flag, rising wedge, whatever you want to call it, that we did very recently on the daily time frame for Bitcoin. We were predicting this breakdown for absolutely ages. You can see within the past week or so, we've started breaking down. We beautifully called this about a week ago. We called this about 2 weeks ago as well. It's finally started to play out, but as you can see, daily time frame broken down, and within this, we've started forming on the 4-hourly time frame once again a rising wedge. Within this chart specifically, this was the breakdown level, 21,500. We've already broken to the downside of this on the 4-hourly time frame, and we've already now closed another 4-hourly candle. So I know this candle here hasn't yet started to load in, but within the next hour you will see a new 4-hourly candle come in, and you would have seen that we would have had a 4-hourly candle body close beneath this. On the 1-hourly time frame, it looks like we did try and come up and retest this as resistance. We didn't get enough momentum to really push us up to these levels, and you can also see on the 1 hour, this looks like a beautiful M pattern breakdown. You've broken down, you've come back and you've retested the neckline, and it looks like I've been saying, in the immediate short term, this is another one of these red flags that should be calling for a breakdown in the immediate short term. This should take us down to 21,200, which really isn't too bad of a breakdown considering how it's only $200 away. However, this is... We'll talk about why that's more bearish in just one second, but we need to first of all look at this bear flag breakdown chart. Now, once again, this is something that I've seen people draw a few different ways. I've personally got this drawn down here, and I'll show you why I think this is beautiful to have it drawn down to these levels. But technically speaking, you would have more touch points if you did something like this. And if you draw it from here, you can see multiple touch points all throughout here, and you would have already broken to the downside of this on the 4-hourly time frame. So just like the rising wedge, this was kind of round about that 21,500 region. It's basically got the same upper line of support. However, it just looks a little bit different if you're drawing it from the top here. You don't have a rising wedge, you've got a bear flag breakdown. If we do look at this is the bear flag breakdown that I think I'm going to be keeping my eyes on, because there's a very specific intersection with the 21,000 region, in which I think is very important. Also, this would still be your last line of support. Yes, in the lower time frames we are starting to break down the target. The target of the rising wedge. I see, you know, there's two different ways to draw these really. You know, technically speaking, you would take the price target from the back, from the width of the back over here. You can see this would actually take us down to 20,800. However, I've really got a good hit ratio of drawing rising wedges and just immediately putting the price target down to the bottom of the wedge. So I'd be saying 20,700, 20,800. This should be what we're expecting. Once again, I mean, you can see we've been forming quite a few of these rising wedges, and when you do take the breakdown price targets, you know, while you can see they do hit the breakdown price targets and they do have a bounce on these breakdown price targets, if you just simply look at these rising wedges and say, hey, start the rising wedges here, you know, you do come back down to these rising wedges. At least in my experience, this is what I would be looking at as a price target in the immediate short term. Another basically 3% drop down to 20,800. Now, what's interesting about this is why I've got the bear flag drawn like this. Yes, it is very valid when you're drawing to these touch points over here, and when you draw your fib from your low to your high, you can see your 786 Fibonacci would beautifully line up within the next 24 hours or so. Yeah, we're basically next 24, 28 hours or so, we should be floating down to these levels. So as you can see, this would take us down to about 21,000, and then we could potentially have a move back up to the 618 fib, maybe the 0.5 Fibonacci as high as 21,300 again, before we start breaking back down to the downside. And you can see what I've drawn out as my most likely path before we head back down to these lower price targets. And obviously you can see what I'm personally targeting for this in the immediate short term is this 1.618 Fibonacci level down here at 20,000. This is obviously not my bear market low price target. If you watch yesterday's video talking about the Bitcoin exact bottom, you'll know my exact US dollar price target where I think Bitcoin and Ethereum is heading down to. But in the immediate short term, this is where we should be heading down to. If we're also looking at the bear flag breakdown from this, you can see, extrapolating this out, let's say we break down round about here. I don't think we're necessarily going to break down today or this weekend, but something like this is what I see playing out. So let's just say we break out on Monday, or we break out in the next couple of days. It's not going to make it too big of a difference, but you can see this bear flag breakdown target will be coming round about this 18,200 region. And yeah, that is another more of a midterm price target that I expect to be on the horizon. But when you do look at what's happening on Bitcoin right now in the 4-hourly time frame, this is what we previously had drawn out with this support box, and it looks like we're slipping beneath it right now. You can see this is basically the inflection zone here. This was resistance. When it was resistance, you moved all the way back down to the bottom to support back down here. You can see once you push back above this inflection zone, you came all the way up to the top. You came up here. This was resistance. Once again, another inflection zone where you found yourself pushing right back down to the bottom of the flag. And what do you know, my friends? As I'm telling you my prediction for us to have this as an inflection zone and for us to immediately push back down to the floor, what do you know? Within literally a minute or so, we've rocketed beneath this support. Just like I've been saying, my friends, by the time I've uploaded this, we're probably going to be down here at 21,000. But yeah, you can kind of see my TA on this. This was, like I said, the inflection zone. And yeah, it's already happening. The breakdown is coming. I think that this region down here, 20,000, 21,000 is where I expect potentially a short-term bounce to come from today. But this is also another huge warning sign. If you break beneath this support today and you have a daily candle body close beneath this bear flag, if you close beneath 21,000, you are absolutely going to rocket to some lower price targets. And you can already see we're slipping beneath the 0.5. Your 786 would be your immediate last line in the sand in the short term. You've also got a 1.236 Fibonacci down here at 20,500. So that is also a price target that you should keep your eyes on in the short term. But like I've been saying, my friends, the immediate short term, my price target is 20,800 for Bitcoin. If we do break beneath this this bear flag once again at 21,000 and have a daily candle body close, I will be calling for this 20,000 Bitcoin. Well, this is what I'm calling for now. This is my prediction down to the 1.618, 20,000. So let's jump into a few other charts. We talked about the breakdown from the rising wedge, the inflection point from this support resistance zone. The bear flag looks like we're coming back down to support on this. I just want to give you a quick update on the total crypto market cap. Now, this is actually one of the most brutal red flags of all, and there's a few different ways you can draw this. Well, there's a few different points I want to make on this. On the weekly time frame, we've got our Fibonacci on the total crypto market cap drawn from our swing low all the way up to the swing high. And when you can see this, we previously talked about the very important 618 Fibonacci and 786 fib. If you understand basic Fibonacci, you know that as you come up to your swing high, if you break down, come down to the 786, retest the 618 as resistance, that is basically your bear market confirmed. We are going to be moving down to lower levels in the immediate short term, and just based on what I expect for us, just based on where I expect us to be in the next week or so, I'd say we're coming all the way back down to your 786 Fibonacci at 728 billion. This is going to mean a 27% drop for the total crypto market cap. This is going to be very brutal. You can see on this uptrend, this rising channel, this bear flag, whatever you want to call it, as we've broken beneath support. This has now been flipped as resistance. We had a bear flag. We tried to come back up to this. We got rejected. We're moving back down. In terms of the EMA ribbons, they have flipped bearish on the daily time frame. Everything looks really bad on the total crypto market cap. And to wrap it all up, this is one of the nastiest warning signs of all. Yes, we've got this bearish TA, but look at the right side of my screen. What is the valuation of the total crypto market cap coming in? Is it coming in at 1 trillion still? No, it's slipping beneath that. It's coming down to the 999.9 billion region, and we're currently fighting with that 1 trillion. If we start heavily pushing down from 1 trillion, it's going to be a wrap. We're going to absolutely have a nasty, nasty capitulation. Just like I was predicting at the start of the video, you can already see Bitcoin starting to move down pretty fast. This is not the major move. Once you start seeing the total crypto market cap break down from that 1 trillion, that's when you're going to see a lot of pain coming into these markets. Now, I'm not going to do a deep dive into the total 2, which is the altcoin market, because it's really the same. I'm expecting the same sort of move. You can see I previously predicted a 37% drop, and now it's about 32% down. So, or it's 5% down since I made this prediction, and I'm still predicting about another 32% down. So we'll keep this as it is. You can see over on the total 2 as well, it's the exact same. It's textbook, you know, had a massive bull run, came down to the 786, rejected off the 618. We're going to come down to this 786 now. Your altcoins are going to get absolutely decimated on this next leg to the downside. Keep your eyes on the total 1 though. If we start heavily capitulating beneath 1 trillion, it's gonna be a wrap. So there we go. That is what I think is going to be playing out for Bitcoin and the total crypto market in the next couple of days, in the next week or so. However, I do have a couple of honorable mentions that I do just want to spend maybe 10-20 seconds on per chart. So first of all, the DXY. As you can see, the DXY right now looks very, very healthy. You know, yes, in the past day or so, the past couple of days, we've been having a retracement. But I mean, just look at this. You know, we've been having these blast off moments, bull flags, blast off moments, bull flags. And it looks like we're going to be breaking out on the DXY very, very soon. I don't want to deep dive into the SPX. Once again, just another quick update. I am expecting this SPX 2008 fractal to start rolling down very, very soon. Not much to update over on the Nasdaq. It looks like the SPY is going to be opening its pre-market bearish. So once again, you know, it looks like we're going to be making lower lows, lower highs over on the SPY. The SPY looks pretty bearish to me at this moment in time. If we do head over to the MFI, this is also very important. This is a fractal that I've been talking about for really the past month or so. And as you can see, we're really starting to move down very harshly, but we're still round about that 30 region with a decent amount of room to move to the downside before, you know, that inevitable final brutal capitulation back down to the downside is going to be in play. Now, what I want to do from here is I want to look at what the RSI is doing as well, because the last time I checked, the RSI still had a bunch of room to move back down to the downside. So if we pull up the RSI as well, we look at the squeeze one, let's take away the moving average on the RSI. What you can see is on the daily time frame, the MACD is starting to flip bearish for Bitcoin. We talked about this previously. It looks like we're going to be gearing up a lot of momentum on this very, very soon when Bitcoin starts breaking down. Very, very stagnating right now, but it's going to pick up a lot of pace very, very soon. Over on the RSI, we're currently sitting at 40 or 39, and you might be thinking, well, we're very close to the bottom and we shouldn't be expecting too much of a move back down. However, let's look at what happened on previous times where we were at this range. You can see on the RSI, we were right here sitting at a 40 on the RSI, or 39, 38, whatever you want to call it, when we were at 29,000 US dollars. And you might be saying, hey, you know, the RSI is near the bottom, it's not wise to predict a further breakdown. But the matter of the fact is, when you get down to these lower regions on the RSI, that is where all of the volatility is had. And with this move from the 29,000 region right here on the RSI, we almost immediately moved down about 40%, literally within a week or so. So be super cautious. The RSI, in my opinion, is also showing a lot of weakness in the market right now. And over on our squeeze momentum indicator, this is rapidly pulling to the downside. 4-hourly time frame, we're losing momentum on the squeeze one as well. I've also checked on a few of the other oscillators like the OBV and some of the risk metrics. Really nothing else to report other than what we've already gone through on the MFI and the RSI. As you can imagine, most of the oscillators are saying the same story right now, so we won't be looking at all of these. So let's wrap up this video with our final chart. For this, we're going to be looking at the VIX. If you haven't heard of the VIX before, it's the volatility index for the S&P 500. Now, we previously mentioned, you know, this region over here. I think we talked about it, yeah, about 3 days ago, and we also mentioned the VIX sometime in the past 2 weeks. But what we said is, obviously, coming down to this support, we should be witnessing a big run to the upside. And if we come down to the daily, you can see we obviously weren't trading over the weekend, and we had a gap. We massively gapped to the upside, which means that traders, if they're thinking the S&P 500 is more risky right now, they're hedging their bets in options. The price of options are now going to be increasing. With the price of options increasing, you know, people are hedging their bets to the downside, and with the VIX heading to the upside, we should be expecting more volatility coming into the S&P. With more volatility coming into the S&P, with the VIX heading up as well, it's just not a good sign. You know, as this heads up, this is basically inversely correlated to the VIX. So as you can see, the VIX right now is coming into support and should be witnessing a run back up to the upside. And if we look at something like the SPY, you can see this is the inverse. You know, the SPY is doing the opposite. It's not coming into support, it's coming into resistance before a breakdown. And if we do look once again at the VIX, you can really see this is the inverse of the SPY. So I'll be talking about more of this in the future, but yeah, just really quick update on the daily time frame. We were forming a falling wedge. We've broken to the upside of this now, and yeah, I think the next move to the upside for the VIX is coming very, very soon. I won't deep dive into it more than that. If you do want to learn more about the VIX, how it's calculated, you know, what it is, everything about it, I'll leave a link down below in the description down to Investopedia, where you can go and check out everything about the VIX. So that's all I've got for you today, my friends. Hope you did enjoy today's video. This is what I expect for Bitcoin. I'm expecting a further capitulation down to 21,000. If we break 21,000, have daily candle body closes beneath it, we're going to come all the way down to 20,000 in the immediate short term. So all I've got for you today, my friends, and as always, cowboy out. Peace.